When you have all this stuff because these banks are not doing and following the rules, or essentially they're not managing their own risk, you know what is okay? Bitcoin. And so you're seeing people, I mean, think about this. Think about how investors are selling banks and actually buying Bitcoin. This should be the most freaking exciting thing to any of us that we're seeing out there, to see this occurring, because this shows you that there is an alternative. That for some of us, yeah, I have most of my money in banks, for absolutely. But again, am I looking at Bitcoin as a long-term potential to offset risk in the banks, to offset risks of printing of money? Absolutely. And that is why what you're seeing in this latest crisis is why Bitcoin will survive, in my opinion, and will thrive down the line. So what's going to happen here? For me on Bitcoin, I think the first off thing is that this is ridiculous that this is coming as a surprise to regulators, to the Fed, to the government. Like, think about this, guys. You just saw the Fed in basically 1 year raise interest rates from essentially 0 to 5%. All right. How does anyone not think that's going to not break the system? Okay. Again, in addition, and this is something I've said for a long time, I've gone nuts on this. I've said that you essentially have a scenario where the market and investors got addicted like a drug addict to their drug dealer. The Fed was always saving the day. They were always coming in and basically, giving us more drugs in terms of quantitative easing and cheap money. So the fact is, when you go cold turkey, what the heck do you think is going to happen? And I said this a year ago. I said this a year and a half ago. I said the system would break. I said, be ready for black swan events. They're going to come. And here we are today with the banking sector a mess. Europe is now a mess. We're seeing, again, the banks in Europe getting absolutely annihilated today. And again, it's kind of common sense. To me, it's common sense. They had to play catch up, which means they had to jack rates up in a short amount of time, insane amounts. And remember, we're not just talking about going from 0.25% to 5%-ish. We're talking about the rate of change, how quickly it happened. And we're talking about how many hundreds of percentage points that was an increase from 0.25 to where we currently are. Now, in all fairness, banks like Silicon Valley, they deserve a lot of blame too. These guys are probably getting paid millions of dollars. In fact, I saw that the CEO of Silicon Valley Bank cashed out like multiple millions, like $3 million just before this collapse in stock options or whatever he was doing. And ultimately, these guys are getting paid this type of money. You better be damn sure you understand the risks when you see the Fed raising rates. So they're not innocent here either. You know who's innocent? The retail investor that's gotten caught off guard in this stuff. All right. In essence, let's get into the charts, guys. We got to analyze some chart action here. We basically had, by the way, PPI data this morning came in better than expected, meaning it was lower. It actually dropped 0.1%. And what that means, folks, is that inflation on the producer price side is coming down. You would have thought that the markets would have rallied a little bit. Didn't really happen that much. But nonetheless, we are starting to rally a little bit off the lows right now. Now, this is Credit Suisse's chart. Look at this. This is your weekly chart. All right. Now, Credit Suisse is below this key trend line. If we go to the daily chart, look at this. So let me rephrase that. Let me get that back. So look at how Credit Suisse, and this is, by the way, not even including pre-market data. Pre-market data, we're down basically sub $2 down here. But we notice how we broke this long-term trend line to the downside. When you're in a bank stock and you see that type of break, that is not good. Not when you're seeing a break like this at these lows. Because you know what this says to me? It says that there is a risk here of them basically being taken over by the European government. All right, when you have a break like this. Now, if this trend line held, I'd be interested in buying it. But look at over the last couple days how it went below. That is not a good sign. I don't know if they'll get taken over. Maybe they'll get backstopped by the European Central Bank. But either way, it is not a good scenario here. Next up, let's take a look at the dollar. I want to take a look at the dollar today. We know that the PPI data just came out. The dollar is getting a pop today. Look at this. Now, why is the dollar getting a pop when inflation's coming down? I mean, riddle me this. The answer is very, very simple. The dollar is getting a pop. It's ignoring the PPI data. Instead, you know what it's doing? It's looking at the craziness in Europe. When people get panicked, when they get so fearful, do you know what they do? They buy US dollars and they also buy gold. All right, that's what people run to. So it has nothing to do in a normal scenario. If the banking mess in Europe wasn't going on, if the banking mess in the US wasn't going on, you know what they would do? They would be probably selling the dollar on the PPI data. But because of this, because of the issues here, people are running to the safety of the dollar, and that also is not a good thing for the US markets. Markets don't like a higher dollar. You know what else doesn't like a higher dollar? Bitcoin. Bitcoin again pulling off yesterday's high, but look at this chart. This is why I use charts in every day. I had a long and verified investing crypto in Bitcoin. You know where we unloaded it? We unloaded it right into this trend line here. Look at how this trend line has caused price to pull back every time. And so again, the thought process here is, well, don't try to reinvent the wheel. Just follow the freaking charts. And that's all I did. So yesterday we unloaded just above 26,000 our Bitcoin position, and it's pulled back since then. Now, again, part of that was also a 3-bar surge. We know that in trading, when you have 3 mega green candles to the upside or 3 mega green candles to the downside, in general, you get a bounce or a pullback. In this case, when it's a sharp move up, you get a pullback to the downside. All right, so right here, this was resistance on Bitcoin. Now, Bitcoin's hanging in there today in spite of a stronger dollar. Now, that's kind of weird. Why is Bitcoin up when the dollar is surging? The answer is so simple, and it's so poetic for why I like Bitcoin long term. Now, you guys know, shorter term, I still think we're going lower. You know, that hasn't changed. 12 to 13,000 first target, maybe 9,000 second target. But on the longer term basis, what we're seeing today, what we're seeing for the last week is exactly why Bitcoin was invented, why it came to fruition. It's because when you have this craziness in the system, when you have scenarios where the government has to come in and backstop deposits, when you have all this stuff because these banks are not doing and following the rules, or essentially they're not managing their own risk, you know what is okay? Bitcoin. And so you're seeing people, I mean, think about this. Think about how investors are selling banks and actually buying Bitcoin. This should be the most freaking exciting thing to any of us that we're seeing out there, to see this occurring, because this shows you that there is an alternative. That for some of us, yeah, I have most of my money in banks, for absolutely. But again, am I looking at Bitcoin as a long-term potential to offset risk in the banks, to offset risks of printing of money? Absolutely. And that is why what you're seeing in this latest crisis is why Bitcoin will survive, in my opinion, and will thrive down the line. So what's going to happen here? For me on Bitcoin, I think you're going to pull back to this line right here. You might get a little bit of a bounce. Then I ultimately think you'll retest down here and eventually break lower. I still think, again, this 18,000 and change level will be meteoric support. I plan to buy some Bitcoin off that level. There's another level here to look at. Take a look at this. If we put a trend line in right here and we put it from this low and just curl it up, look at where that line coordinates, right at the 18,000-ish level, 18.2. So to me, when you have a confluence, when you have 2 or more trend lines converging, and if price comes in there, that is a huge level of support. Ethereum, I put this alert out yesterday. In fact, we shorted it yesterday in verified investing crypto. Resistance, resistance. Guess what happened yesterday? Resistance. We're in the money on our short in verifiedinvestingcrypto.com. So again, not a lot in the money, but nonetheless, just following the charts. While everyone else was talking major breakout new bull market yesterday, we just simply sold our Bitcoin into resistance and we shorted Ethereum. Very simple. You know, again, we're not trying to invent the wheel. I don't try to invent the wheel. I let the charts talk to me. Essentially, looking at this chart, when I first started, 20 plus years ago, it was a foreign language to me. I was like, what the heck, man? It just looks like a bunch of weird ups and downs and reds and greens. Heck, it looks like a Christmas tree. But you know what? When you learn the language of the chart, it speaks to you. It doesn't tell you what 100% is going to happen. It tells you what the probability, a high probability scenario is. Gold is ripping higher today. Beautiful move to the upside. And look at this move here. Guess where we're headed, guys? All right. Look at this chart. You have your up move for 2 years from 2018 to 2020. You have sideways consolidation. I still remember when we were trading down here, everyone was like, oh, Gareth's insane. Gold stinks, da-da-da-da-da. Yet it was still the best performing asset between the S&P 500 as well as Bitcoin. And then look at the run it's gone on here. This was my prediction, is that when the Fed finally gets to a point where they have to pause because things get so messy in the economy, you know what's going to happen? We're going to see gold rip. Now, gold is going to have resistance coming up at this upper trend line around $1,955. That is okay. That's normal. It's going to have a pause, a pullback, and then it's going to bust through. and break out. And then you know where it's going to go? It's going to go to your double top high right here. All right. By the way, I have to just point this out. This morning, BlackRock's Larry Fink, who is, by the way, one of the most respected investors and traders in the world, said exactly what I've been saying for the last year, that inflation, and this is one of the cases for gold, is going to stay elevated for many years to come. He said 3.5%. I've been saying around 3%. I think that's exactly dead on. I'm sticking to that. And you know what? The fact that the Fed is going to have to probably pause or stop hiking, maybe they'll hike 25 basis points next week to keep face. You know, again, the Fed seems, intent, just like when they said transitory and it wasn't, they had to just overreact the other way. But the bottom line is that essentially you're going to have inflation staying elevated, which is then going to be the bull case of long-term for Bitcoin as well as gold. Essentially, remember this, 2018 to 2020 up, and then sideways to lower for the last 2 to 3 years. We're going to go to the weekly chart. I know some of you guys have seen this before, but if we go back to the 1970s, the last time we had these issues, the last time the U.S. faced inflation that was as high as what it got to, you had the same pattern of performance. Basically 2 to 3 years up, 2 to 3 years sideways down, and then look at the bull run that gold went on from essentially a low of $110 to a high of almost $900. So again, look at the patterns basically redo themselves. They're mimicking, they're rhyming, and this is the way charts work. Now you might say, well, what the heck? I mean, why do charts continue to repeat? I mean, how is that even a thing? And the answer is simple. Do you know who was trading this back then? People like you and me. People like the millions of people that trade commodities that were influenced by the scary nature of inflation, what was going on with the Fed, all of it. You know who's trading it in the current time frame? If we go back here, you and me, same thing. And that's why it repeats, because the same fear that we feel, the same emotion, the same greed, it's repeating in any time frame. You could go back 1,000 years. You could go back to ancient Rome. You could go back to ancient Egypt, and the same emotions were present. And that's who the buyers and sellers are feeling, that emotion. And that is why trading essentially repeats over and over again. By the way, that's why charts work, because it's essentially repeating. Take a look at silver. Silver is running in verified investing alerts, which is my stock service at In the Money Stocks. We are long SLV, and SLV continues to run up here. Where's SLV going to run into resistance? Right here. This is going to be your resistance line. I think it does get up here before it pulls back. Your target is around $23 on silver. So great move from basically sub $20, now above 22 and a quarter. I think you have a little bit more upside. Eventually, is it going to break out of this wedge pattern? Yes. Eventually, yes. But you'll have some pullbacks coming up here on this chart.